Yeah, thank you all for joining. Today we'll discuss real-world assets. For us, for Gnosis, that's actually a very important part where we see a lot of growth potential. And with me today, as Carolina already announced, is Lucas Vogelsang. I would say an OG in the field of real-world assets. I think Centrifuge started 2017?
2017.
So I think there are very few companies that actually lasted in crypto that long. And I think that allows you to also have a different perspective, I think, on real-world assets and how the landscape has evolved. I think if we exclude, let's say, the core stable coins like USDC and USDT from real-world assets, then I think if you just look at the market cap of real-world assets, still fairly small compared to the overall market cap.
Yeah, it depends on how strictly you define real-world assets, but it's about $1 billion today.
So in short, it's basically
nothing.
Nothing.
In the traditional markets, asset market sizes are measured in the trillions. So yes, we're 3 orders of magnitude lower still than that.
Yeah, so there's a lot of growth potential. I wonder, how do you see, how has this topic evolved over the time, as you have been starting, almost a decade ago? And what has changed, and why do you think right now we are at a point where we can trigger actually this growth phase?
I mean, I think, and I think we really should have a conversation because, I mean, of projects that have been around in this industry for so long, I would count also Gnosis as one of the few that is surviving and thriving. And I think we actually have probably very different journeys, but are working towards ultimately what I think is a very similar shared vision. We maybe I think very typical of 2017 crypto founders was you come into the space with a bunch of naivety and a bunch of kind of big dreams, and then you spend a couple of years realizing you need to build a lot of the fundamental infrastructure that's missing, right? I mean, Gnosis at the time was trying to build a prediction market, and you ended up building a DEX, a wallet, a multi-sig, a chain, bridging, and a credit card, debit card. So I think similar for Centrifuge, we had this big vision. I kind of knew about Bitcoin for a long time before I really believed that Bitcoin could go anywhere. My challenge with Bitcoin was it's too exotic for a real user to kind of start buying their daily groceries in it, or for a person in finance to actually use it. I love the censorship resistance. For me personally, motivation was always the story of WikiLeaks getting deplatformed, Visa and MasterCard just turning off any sponsorship of or people donating to WikiLeaks, right? And so that was the idea that you could use Bitcoin for something like that was great. But from there to what is actually a product that everyone in this world will want to use and can use, I think is quite far. So with programmable money, which was one of the core ideas of Ethereum, I would say, and to date still the most popular use case of programmable blockchains, that was when we said, oh, this is actually what we can use to allow businesses, banks, financial institutions, borrowers, lenders, right, from around the world to come and actually do these transactions without as many intermediaries as was necessary in the past, doing it in a much more open way, kind of building this financial system from scratch. At the time, we didn't have stable coins, we didn't have any significant kind of on-chain liquidity. Most people that were using DeFi didn't really have an understanding of how these financial products worked. And so it was that was kind of the long journey we took to today. And I think you can kind of look at what were some of the big stepping stones or kind of achievements we've had. I do think the proliferation of stable coins as a stable medium and store of value is very important. Fiat on off-ramps becoming a lot better. I think we're not there yet on regulation completely, but I think there's a much better understanding. And I think in some way also, fast forward to today, I think people, now in 2017, I thought, we just need to build some smart contracts, and that's what's going to replace the financial system. I think what I learned, or like what we as an industry learned, like there's a lot of stuff in finance that we have to like actually bring in, like knowledge, people, etc. And I think the people part is a really important one, because we did see, I think about 3 years ago, the average person that came from a finance background and was interested in crypto was interested because Bitcoin is crazy volatile, because it's digital gold, it's an asset class that they can invest in. Today, the person that has a finance background, like whether that's working at a bank, in credit, in lending, in equities, really anything, right? They are starting to understand, actually, it's not an asset class. It's a technology that I can use to do my work in a better way, in a more efficient way. And I think that is like maybe the reason why we saw even like the largest banks, right, the largest financial institutions go from having almost no view on crypto, or a very limited view on crypto, to like BlackRock launching a tokenized fund, to like everyone starting to buy these products in ETFs. And so I think that is like that was like what gave this a lot of boost. And this is we're just seeing the beginning, right? I think over the next years, you will see like a massive inflow of like new assets, and ultimately like new buyers of these assets that will be comfortable actually using this technology, because they see this is worthwhile to make the investment in, to start using. Which maybe, I mean, to turn it around to Gnosis, as I mentioned, you started with the wallet.
One question.
Yeah.
Do you think then the adoption will come mostly from institutional side or retail side?
I think this is where I mentioned we have maybe a bit of a different path towards it. We focused very much on the institutional side, because I do think like crypto is very hard to use as an individual. In kind of creating tokenized products, whether that's treasury bills or credit, like then going and selling those to retail users is very hard. So actually what we said is, well, instead of trying to go and try to get the average person to invest in a real world asset, it's much better if we go to DAOs, because they, like a stable coin, it should be a stable coin collateral, right? The first thing we did was we worked with Maker to onboard these assets to mint DAI with it. Why? Because like I think those are kind of the financial institutions of the future that can do the work that is required to underwrite and evaluate what kind of real world assets they want to buy, kind of go through this work and then make this decision. And so for us, like it was this almost like B2B2C kind of distribution strategy, where like I don't think Centrifuge today is at a point where I would expect hundreds of thousands of users to own these assets directly, the same way that I personally don't try to pick stocks. I bought Apple stock because I thought, yeah, it's probably a good idea 10 years ago, and it was a good idea, but like I don't do this on a regular basis. There's some people that do, and like Robinhood, for example, is a good example of where people do it, but I think we've started with the institutional users. I think then you'll see things like ETFs and like broad funds, kind of high yield savings accounts, like those products that still need to be built, that then I think are more retail friendly. But you did take kind of a different route, right?
Right, yeah. So for Gnosis, of course, we are operating a network, Gnosis Chain. You're also operating actually a network. Centrifuge actually is also its own blockchain. But for us, our vision is to actually bring crypto to a lot more users and make crypto more accessible. The core of the strategy is a wallet that we're implementing called Metri. For those of you who have not tried it, you can onboard to Metri to buy ice cream. It's very delicious. And
down there, ground floor.
Yeah, if you haven't done it yet. And this is a wallet that is really optimized for great user experience. It uses new technology like passkeys that can be enabled through safe modules to allow like really straightforward key management. And with this wallet, we really try to address the Homer Simpsons of this world, to really make crypto so accessible that anyone can actually start using it. And for this, we are building different bridges to real-world finance. So Gnosis Pay is core of the strategy, where we integrate with Visa and allow people to offboard easily. We also have other integrations with Monerium to the SEPA network. So we're basically trying to build an experience that for the end user should be indistinguishable from a neobank-like experience. And we really see that in order to like offer more services. Real-world assets will be a very core, important part that our user group potentially would like to have exposure to. And yeah, this is right now not possible. I think if today, let's say, there would be liquid assets for yeah, all kind of different stocks and ETFs on chain, people would start using it just to diversify, for example. But right now, the problem is it's kind of a chicken-egg problem. As you said, the total market cap of all real-world assets combined is just $1 billion. And then for every specific product, it's so small that as a user, you see a risk that you are kind of you have risk in holding this token simply because there's very few intermediaries that control this. They have not been around necessarily for a long time. And there's generally worry. I mean, I personally try to convince parties that are very close to me to diversify into real-world assets via different protocols. And there was always the argument, yeah, it is something that is very new. We don't know how long it will be around. And how trustworthy is it? Even if there's a close relationship, there's still hesitation. And yeah, in that sense, it's kind of a chicken-egg problem where first trust has to grow in order to issue more assets, and then it is, yeah, then it also becomes more attractive for others to join, of course.
I mean, this was one of the hardest thing for us was to kind of bootstrap and like in 2020 when we did the first pilots in 2019, but in 2020 when we first had the first kind of broader, like bigger pools go live, and bigger at the time meant for us like more than $1 million. So like it was extremely hard, and the challenge on the flip side is what you mentioned, chicken and egg. You kind of today still operating at a stage with relatively immature technology at a scale that is still a bit too small to really make this work. So you kind of you struggle in, well, you don't want to underperform TradFi assets because then you might as well just go off chain and do it the traditional way. But to really outperform it, you do need the demand, and so like, okay, where do you get this demand from? I think we've gone from, I mean, at the time, I think in 21 we had 8, so we went from like 10 million TVL in 2020 to 80 million in 21. Then, like, of course, FTX and Luna like wiped out a lot of TVLs, and we actually stayed kind of constant. Now we're at around 270 million. The single like the single deals, they started growing, and so we're like, again, I mentioned like in TradFi those deals are like no one really does anything under $100 million. So or very few people do. So right, like this is still extremely small, but we're getting to a point where now you do have like the number of stablecoin holders go up, and now there's a number of those people are realizing, okay, maybe I do want to start earning some yield. The interest rate environment in the off-chain world changed as well, which means actually, I mean, this was another challenge for the longest time. Like you almost never beat DeFi yields, like whether that's like supplying into Aave or anything else, if you just bought treasury bills, because those rates were 0, and in DeFi it was always a bit higher. Now it's a bit more balanced. It's still like in the bull market, DeFi yields go up like crazy. In the bear market, they go down. So that depending on where you are, I think that is like actually changing, and that is creating a lot more organic demand actually. And I think that. So we are getting to a point where now we can start onboarding bigger users, but like these users, right? Those like asset managers, like they would they would launch an ETF-like product on chain. Now they, so now it's you can start talking to them. Well, they'll probably take a year to make that decision, to vet everything, to go live, right? But that is eventually going to happen. So for us, it really has been like to kind of go from one kind of equilibrium of like supply and demand, which was like 10 million in 2020, to like scaling to 100, to like now like trying to see, okay, how far can we scale this next? And so yeah, I think this kind of supply demand is still quite challenging, and crypto as a whole is still very isolated. So like the Gnosis pay, and the more I think is extremely exciting, because the more people that go in and out of crypto all the time, and the less it becomes this isolated, crazy speculative, volatile asset asset class ecosystem that is like DeFi utility tokens, governance tokens, maybe staked ETH, meme coins, NFTs, right? And being completely in a separate world, and like your real estate portfolio, the account you pay your monthly rent out of, and everything else, right? We need to bridge those worlds together, both on the individual user, but also on the B2B side, because that's like when we'll start to actually make those markets be more efficient and test a lot of those like kind of overlapping area that ultimately for us is real assets.
Yeah, I can totally see that, especially kind of what you mentioned is kind of in some sense funny that in order for real world assets to become more attractive, our market has to go more into probably like a more stable or almost bear market-like environment, where there's a higher incentive to diversify and also, potentially invest into bonds. I know there was very high demand to get like US Treasury bills on chain for some time, and then of course, as soon as the yields went up in DeFi again, then it's of course it's much more attractive to just get exposure to those.
I mean, the interesting thing is like, and not to nerd out in finance too much, but like the risk, what is considered like risk-free, I don't know, like the DAI savings rate or like in the Ethena SUSD yield isn't completely risk-free, but like you can say it's hedged against the market. You take some risk against some of these exchanges, but like that, like Ethena's product exists in the TradFi world as well. It's, I mean, it would be just called a basis trade hedge fund. That is a few basis points above treasury bill rate in TradFi, whereas in crypto, it's 20, 30, 40, whatever %, right? The reason for that is there's I mean, ultimately just one primary reason, because when you do this basis trade against corn futures or oil commodities or whatever, right, there's hundreds of financial institutions that will very happily lend almost unlimited amount of money to it and make this extra 10 basis points because the risk is well understood, there's good regulation around it, and so it's pretty easy. Whereas in DeFi, all of these derivative exchanges, or almost all, don't actually accept US counterparties. So all of Wall Street is already like kind of shut out. Wall Street would never do it anyway, because like as long as you have FTX and Mt. Gox happening on a regular basis, meaning like more than every like 50 years, which is maybe the last larger financial crisis, or maybe 20 years, right? Then that risk is way too high for like actual traditional financial institutions to come in, which does lead to, yeah, like today those two markets are very, very disconnected, and so like, which is why ultimately like DeFi yields go like crazy when there's like positive market sentiment, and like all like kind of TradFi isn't able to or doesn't want to tap into it.
Yeah. Kind of ending the time, but what kind of real world assets do you think will, like, what is the asset that people would be most excited about? Like, if Centrifuge would have to double down on one thing, what do you think would be the real world asset that would have the most demand?
I would give two answers. I think maybe the people in this room, the people that are in crypto today, they probably want relatively liquid, still slightly higher than treasury bills, yielding assets that are relatively simple. So like, it's really maybe like a place where you park money for a couple of months. I think like there's kind of, that can be in very high quality, investing in very high quality loans, like a distributed portfolio. I think that's kind of the need of this like on-chain high yield savings account, a replacement for SDAI or putting money into like an Aave market, for example. Now, if you talk to someone in TradFi, they want something they can't get today. And so there actually, my answer would be, you have projects, like one example I always use is like you have projects tokenizing music royalties. What if you actually then could take those music royalties and lend against them and earn interest? Now that is a market that is extremely like fragmented in the traditional world, like very liquid, very intransparent. So like most investors can't really easily invest in that at scale. So if you go to a traditional investor, like you'll have to sell them on something like, yeah, like you can invest in these assets through crypto because they're actually crypto. They have some easy way to get into these assets that they don't have in the traditional world. So, and I think we're trying to kind of do both in Centrifuge.
Cool, very cool. With this, I would like to open it up to the audience in case anyone has questions.
Thank you so much, both. Amazing conversation here. And yeah, we have time for a few questions. So please, whoever wants to make any questions.
Wait, just you're getting a microphone.
Oh, thank you. That's nice. Lucas, you mentioned risk as a major obstacle for TradFi investors to get in. To which extent do you think regulation and infrastructure is also an obstacle at this point? Is it less so than before?
I mean, I think for me, like regulatory risk and technical risk are a huge part of the risk that I'm talking about. So no, I think that is part of it, right? Like as a large bank, what happens if you hold USDC and there's suddenly like a bank run and like your shareholders freak out, right? Like that is very hard as opposed to like having a well-regulated stable coin that like you can treat as cash and like you're on the safe side. I think another one for sure is like wallet infrastructure, like you talked about passkey and like just a very easy way to onboard. Institutional users, they need to use the same, right? Like the idea that you're paying like thousands of dollars a month simply to hold like a digital asset in a relatively secure custodial way, I think is not really realistic, and we need things like SAFE to be much more established. And like, I mean, it's like I sometimes sweat when I make large crypto transactions, and I do it often. Like that is, now imagine someone that hasn't been doing this for 5 years, 6 years. Like that is that is like obviously very expensive, right, for them to kind of justify that risk. Yeah.
Anyone else?
And I think SAFE is awesome in that regard. Like this is where it's going to go.
Yeah, I think technology-wise, we are getting there.
Yeah, solving a lot of this.
I'm not too concerned about technology. I think regulatory-wise, that's
a
still
bit
difficult.
less under our control,
like
but we
I can also say from Gnosis DAO perspective, for example, we actually, I think we're the first DAO to onboard to Centrifuge,
yeah.
right? Or one of the first, and we also acquired like real-world assets from other providers. But until now, we did not really feel comfortable, and we as like a larger like organization or like larger teams providing liquidity for those assets on decentralized exchanges. And that's of course what needs to happen eventually, like give other people exposure to it and be able to distribute those assets easily, right? And right now it's still like a very convoluted process. It's really like, I think I'm one of the few people who holds actually Coinbase stock on chain. And I'm very happy that I did it, but the process is just so complicated and it's just nothing in any way scalable. But I'm pretty sure if we can prove that there's enough demand and issue enough of those assets on chain, I think then there's also just the incentive so high that people will start providing liquidity and make it more accessible. So I'm just talking about this chicken and egg problem. Recently, I also had a discussion with another real-world asset team about this. How could we possibly solve this? And it would be maybe one way to kind of, has to be like a way to gauge interest, which also sort of is a pre-commitment to actually invest into those, almost like a Kickstarter campaign. Like if you have enough people willing to buy this asset, then actually it is fulfilled. But yeah, I think we'll see.
I think the DAOs, right, like Gnosis DAO or like having like a way for example Gnosis Pay users to just very simply go in and out of these assets, but then like not asking them to like make their own investment decisions, but like using a DAO to kind of curate a different portfolio option so that I can at least know I pick between these five different asset classes, right? As opposed to like saying, okay, like I like IBM and you like Sony, and like we're going to have to do all of our homework ourselves. I think simplifying that process is going to be very helpful.
I think we have one extra question. Yep.
Yeah, so Piers from Radix. There seems to be a trend at the moment in DeFi towards yield-bearing tokens, where you essentially abstract away the underlying, and then you have a yield-bearing token on top of it. You've seen that popularized on platforms like Blast, Mountain Protocol, etc. Do you think that this is the direction of play for real-world assets on Ledger, or do you think that that isn't the right direction?
I mean, the yield-bearing tokens, every kind of credit product, I would say, will end up being some sort of yield-bearing token. An equity product typically maybe will have a dividend but not bear yield, right? Like Coinbase is just whatever the price of Coinbase is. But like treasury bills, like credit, etc., all of these I think will ultimately be tokens that will just expose you to yield. I think the one big question that you're talking that comes up though with like Mountain and some of these others is like, how safe is the asset actually? Technically creating a yield-bearing token is easy. Legally, you have, and this is maybe also a challenge of how early we are in the industry, it's very, very hard, there's maybe like 100 different legal structures today, and it's very hard to know which one is the right one. And it'll still take a few years to have like some legal structures crystallize, right? Like we know the entire reinsurance industry is in Bermuda, like because they have a good legal structure. Every company that is almost every company that's incorporated in the US actually uses the Delaware legal system because they're very friendly, like they have a good legal system that makes sense to incorporate a company, right? And so I think similarly, like there's in real world assets today, there's people experiment with Switzerland, Luxembourg, Bermuda, Cayman, BVI, US, right? All of these things. Now that I think is still like then there's some that just say, oh, we don't need any of this. We're just going to do it all permissionlessly and hope that no one will sue us. So there's these kind of different approaches, and I think we'll like have to go through a lot of like learning, and some of this learning will also be painful because it will be like losses and lawsuits that will decide some of these things. But that's maybe like the key point in like where these where it actually is the difference in these different yield-bearing tokens.
Not sure if you want to add something, Stefan, or
it's all good, huh?
We still have 1 minute, so maybe one more question. Okay, then I guess that's it. Thank you so much again for the amazing conversation.
Thank you.
Thank you.